Well, folks, holy smokers, the stock market has been canceled. Yes, it has been canceled indeed. And today, we're just going to talk a lot, okay? I don't have a lot of slides prepped for today. We just have a lot to talk about in this market. I think there's a lot of questions on people's minds about what's going on in the stock market. Should these stocks be canceled? Those sorts of things. If you look, it's just vicious. I mean, it's 52-week low after 52-week low after 52-week low for a lot of these stocks. Honest, 52-week low. PayPal, 52-week low. Square stock 52-week low, Teladoc 52-week low, Russell's getting close to a 52-week low, Chef a 52-week low, all-time low, Palantir's right around a 52-week low. It's just stock after stock after stock are at 52-week lows, just getting absolutely decimated, right? Anything that is seen as any bit of risk. I mean, even PayPal. Like, are you kidding me? Like, really them? You know, some of these stocks you can make arguments because they're younger businesses. You could say da-da-da. But some of these companies, it's just like, it's unbelievable, really. Like, some of these businesses have been established for 10, 20, 30 years and are beast business models, and they're getting put down, right? So I want to make 6 core points in this video here today for everybody, because I think this is a type of video that is really needed in this sort of market right now, where it's just stock after stock at 52-week low, and it's just devastation. I'm sure there's a lot of people feeling down and out. Even a lot of the buyers in the market who are usually enthusiastic about a deal in the market, right? And to see stock prices low, even a lot of them have been beaten down. And so this is, I just think, the kind of video that's needed. I hope you guys enjoy it as always, okay? First thing we got to talk about, do these stocks really deserve to be canceled? So let's ask ourselves that. Do these stocks deserve to be canceled? Kind of like cancel culture, right? And every once in a while you see somebody got canceled and it's like, did they really do something so egregious that they deserve to be canceled? Well, in most of these companies' situations, they don't deserve to be canceled at all. They actually are great companies that have unbelievable growth prospects over the next 5-10 years. And so in many of these stocks situations, they don't deserve to be canceled. They don't deserve to be put down to a new 52-week low after new 52-week low after new 52-week low. But that's what the market does sometimes in the short term. That's what happens. It happens all the time. Every other year practically, there's something crazy happens in the market, and it's always blamed on a different thing. Oh, it's the Fed. Oh, it's a presidential election. Oh, it's valuations. Oh, it's something happened in China. It's always something. Oh, it's tariffs. Like, I've been doing this for 14 years. There's always something to take stocks down to some irrational prices and cancel the whole stock market, right? It never fails. And right now it's the Fed and interest rates. Everybody knows, think about this for a moment. Everybody knows the Fed's going to raise interest rates. Everybody's known this. So maybe they do it an extra time, or maybe they don't. Have we ever thought about that? And just because they do it an extra quarter point or half a point or whatever, that doesn't mean all of a sudden, oh my gosh, send all stocks down 40, 50%. It's not the way this works at all. And so I've been doing this for 14 years, and I've just seen it time and time again. It never fails. There's going to be a new reason and a new reason. Then stocks will boom, and then there'll be some sort of new reason again, right? It's what consistently happens, and usually it just doesn't make sense to cancel stocks, but it happens, okay? Second thing I want to talk about is, will these stocks scale revenues and profits over the next 3-5 years in a meaningful way, right? And I think that's very important to think about if you're investing in any of these companies. Is when you're buying a stock, you're buying an underlying company, and you got to ask yourself, what's going to happen with that underlying company? Every single underlying company that I'm investing in, I believe their revenues and their profitability is going to increase rapidly over the next 3 to 5 years. And you've got to find the type of companies that you believe are going to rapidly increase their net income and their revenue over the next 3 to 5 years. And if you're in those sorts of companies, at the end of the day, especially when valuations are getting pushed down and you're seeing new 52-week low after new 52-week low, that's usually some of the most interesting times to possibly buy out there. But that's very, very important, because you got to understand the market's going to do whatever the market's going to do in the short term. And if the market wants to crash all stocks to new 52-week low after new 52-week low, like so many of these stocks, it's going to do it. And you can't really it is what it is. But at the end of the day, you got to ask yourself, what's going on with the underlying business? What's going on with the fundamentals of that business? And if I bought a stock and it's down 30%, did the fundamentals of that business really just get 30% worse? Or do they have 30% less revenue going in the future and 30% less net income going in the future, and those sorts of things? It's very, very important to ask yourself that question. Number 3, Will money return to these growth stocks? I think this is a next really important thing, right? So, as I told you, I've been doing this for 14 years. And what I've seen consistently is the majority of time, money loves to be in growth stocks. You go through these time periods when, growth stocks get pushed out. And it happens every once in a while, and don't just hope these happen all the time, because they're far and few between. But they do happen, and every once in a while, like people are like, I don't want anything to do with the growth stocks. Investors are like, I don't want anything to do with the growth stocks, and that only lasts so long. The fact is, let's think about it for a moment, right? What do you want to own? Do you want to own Coca-Cola and Pepsi, or do you want to own, the drink company that's got 40% growth for the next 5-10 years, right? Everybody wants to be, at the end of the day, in the short term, maybe people want to flood to Pepsi and Coca-Cola, but at the end of the day, people really want to be in that growth stock. And the money will rotate back over that growth stock. And it's kind of like a ticking time bomb where it's just like tick, 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 and it's just a matter of time before the money rotates back over the growth stocks, because the fact is, that's where people want to be. No one wants to be hiding out in a few of the biggest companies for all of eternity. That's just the bottom line. They go through these little time periods where money rotates to maybe dividend stocks or some of the value stocks, but the fact is, that's not where money likes to be. Money likes to be in growth stocks. That's the way it goes, because the growth stocks are what gives you that big ROI potential, right? In times of a scary market, a volatile market where folks are scared, I don't know, what's the Fed going to do? In the short term, all of a sudden money can go to the value stocks, and everybody wants to be in those, right? When I got started in the stock market in 2008, 2009, there was a time period when, what were the stocks I was buying my first couple years of being in the market? Kimberly-Clark, Conagra Foods, Walmart, like the most basic companies, Walgreens stock, like the most basic, simple companies, because at the end of the day, that was what was seen as safe in that sort of volatile market. And so those are the stocks I got into. Obviously, looking back on hindsight, what I should have been doing is buying growth stocks, because guess what? In 2008, 2009, there was 52-week low after 52-week low for growth stocks, and a lot of those growth stocks ended up going to 2x, 3x, 4x in the matter of a 12-month span after the market bottomed in March of 2009. It was insane. And meanwhile, I was hiding out in what was seen as the safety stocks, making very little ROI, and then just watched all these, growth stocks go up massively in their terms of their value, right? So at the end of the day, keep in mind, if you own a great growth business and that company just keeps growing year after year, the money's going to flood into it. I've never seen it not. I've yet, in my 14 years of being in the stock market, I've yet to see a company put up impressive numbers year after year after year and just have insane growth, and money doesn't flood in that stock. It never fails. All the money always comes in, and next thing you know, that stock doubles up, triples up, quadruples up, and it's like, it happens quick. That's the thing that I think a lot of folks don't understand. In the market, things happen really fast. You go from an ultra bullish market to an ultra bearish market in a snap of fingers. You go from an ultra bearish market to a bullish market in a snap of fingers. It happens really quick, and it happens so quick that people even forget it happened. They're like, what? Oh, I remember that? There's so many reasons that the stocks went down over the last 14 years since I've been doing this. I can't even remember them all. Like, there's been so many corrections in there. There's been so many times where all of a sudden, growth stocks got thrown out for a period, or value stocks, or whatever, right? It never fails. Fourth thing I want to bring up here is, a lot of folks are wondering, is it the perfect time to buy, right? Is it the time to buy stocks right now? And I would answer that question like this. So in terms of how I think, is there ever a perfect time to buy stocks? I think that's a fair question. Is there ever a perfect time to buy stocks? And I will tell you the answer, as somebody that's been doing this for 14 years, no. There is never ever a perfect time to buy stocks. There's always reasons why you shouldn't buy stocks. Always, and there always will be. If it's not the Fed and what the Fed might do, it's a presidential election. If it's not a presidential election, it's whatever's going on in China. If it's not whatever's going on in China, it's valuations. If it's not valuations, it's this thing, that thing. It's always something. There's never been a time period since I've been in the market where it's been like the perfect time. There's always things to worry about year in and year out, regardless of what the Fed does or what the Fed doesn't do. Always things. There's never a perfect time to buy. The way I look at it is very, very simple. Are there companies out there that I love and I think are going to go up a ton over the next 3-5 years. And if there are, and there's great prices, I buy those dang stocks. And that's the bottom line. I don't get caught up into all what's this, that. Because at the end of the day, if you're getting caught up into all that, then you're trying to do the cardinal sin, which every great investor, truly great investor, who had unbelievable track records over a 10, 20, 30-year span, what does every single one of them say? Don't time the market. Every single one of them. There's not one that you respect. There's not one that says time the market. Not one. Every single one says don't time the market. And if you want to go against that, you're going against all the greatest investors in what they've said throughout history. At the end of the day, the greatest investors look at it like this. Is this stock a great deal and going to make me a ton of money over the next 5 years? And if it is, they buy the stock. And if it's not, then they don't buy the stock. And you get caught up in it doesn't make any sense. It literally doesn't make any sense. If you're buying into a great company that's going to thrive in the future years, that's what it's going to do. And to waste time trying to time it out, maybe I'll wait till June to buy some stocks, or there could be something happening, so maybe I'll wait till April, or you're playing a game of time in the market, and maybe you get lucky. Maybe you get lucky and you time it out perfectly, but I can tell you, 99.9% of the time, you're not going to time it out perfectly. I had a friend who he sold out of all his stocks the first week of March, toward the end of the first week of March of 2020, because Rona was starting to go crazy. There was all of a sudden talk about potentially shutdowns, right? And for about the first 2 weeks, he looked like a genius. He timed it out, in terms of he got out and stocks kept going down. And then after that, stocks started bouncing back and bouncing back and bouncing back. And he ended up missing out on 6 figures of gains in that situation. 6 figures of gains because he had sold out of his stocks trying to time it out and be like, well, I'll buy back in when it looks a little safer. And it's just not the way you play this game. At the end of the day, if there's great companies at great prices and you're seeing 52-week lows all over the place and you're like, this company's going to go to this valuation over the coming years, that's when you buy the dang stocks. And there will never, ever, I can promise you, there will never, ever be a perfect time to buy stocks. There will always be reasons on why stocks could go down, why stocks could have a hard time. Okay? So fourth thing. Fifth thing I want to talk about here is irrationality in the market. Now, this is a point I touched on in a video recently. And essentially, if we go back a year ago, we were in a very irrational market in January of 2021. A lot of stocks trading at ridiculous valuations, just valuations getting pushed up to the moon. It didn't matter what your business was. It didn't matter what you were doing. Your valuation was getting pushed to the moon. And what was, the riskier the stock, the more speculative the stock, it seemed like the better it was doing. And, it was for some folks, it was frustrating because we were looking at it and it was like, man, some of these businesses don't even have a business model, but yet their stocks are outperforming even great companies, right? Well, that market got very irrational. And here we are in January of 2022, and we're on the flip side of that, where the market's now very irrational, and it doesn't matter what your business is doing, doesn't matter what you got going on, you're getting pushed to 52-week low after 52-week low right now. I went through all these companies, right? And I could have had 100 companies up here that are truly great companies. And it doesn't matter what Teladoc's doing over the next 5 years right now in this market. They just want to send it to a new 52-week low. It doesn't matter that Honest Business is in a great spot for the next 5 years. It doesn't matter what's going on with PayPal and the fact that Venmo has a huge deal coming with Amazon and all that. It doesn't matter Square. It doesn't matter the chef has got 2 doors coming now in Target stores. It doesn't matter what Palantir is doing. None of that matters in this sort of market, which means you're irrational. When no longer the fundamentals of businesses matter, that's when you know you're in an irrational market. And last year at this time, we were in an irrational market. And this year at this time, here we are in another irrational market. When you know you're in it, you're always in an irrational market when it doesn't matter about the business model. It's just buy it up or sell it down. And that's the sort of market we're in, just like we were in last year. And the thing you got to ask yourself is, how long does this last? Something we do know is the market does not stay irrational for very long. It doesn't. Just as, everybody thought stocks were going to continue to go to the moon, and the riskier the stock, the better off it was right back last year at this time, we knew that wasn't going to last forever. Just as what's going on right now, this won't last forever. I can promise you that. And at the end of the day, all of a sudden, what's going on with these companies, what's going on with the business model start to matter again. And they just grew revenues 22%. Oh, they just grew revenue 32%. They're expected to do ... number over the next year. And their gross margins expected to go this number. And all of a sudden, the conference calls start mattering again. And the business and the underlying fundamentals start mattering again. And all these things that get thrown out in this sort of market, they all start to matter again, because you know why? That's what actually matters in the market. All this other crap is just a bunch of other crap out there, okay? 6th point I want to make here is, I think it's a very, very important one, because I think some folks see low stock prices and they think that means danger, when all along it literally means you're taking less risk in a stock. If Apple, let's say, use Apple, because that's the biggest company in the world. I think everybody can wrap their head around Apple, right? If Apple was 50% above its current price that it's at right now, or 50% below its current price, and nothing had changed in the business model, what is safer for me? I hope everybody watching this says, well, if it was 50% lower, that's a lot safer. But in a lot of people's minds, the fact that a stock price is high, it signals to them, for whatever reason, it's just human psychology, we're very flawed humans, right? A lot of people see a high stock price and they think that means good, that means safe. When all along that means danger, and you're setting yourself up for a lot more risk. The more my stocks go up over time, the more scared I get. The lower my stocks go over a period of time, the more enthusiastic I get it, right? The safer I feel in the market. I feel extremely safe buying Honest at $6. I would not feel very safe buying Honest at $60. I would feel scared out of my mind if Honest was $60. Well, I already sold out of the stock. But buying at $6, I feel extremely safe. Also, it means your gains are just going to be a lot bigger in the future. If a stock continues to go up, and this is something I actually explained with Tesla in the past, right? Tesla, you can't expect the type of returns we've had in Tesla over the last few years. You can't expect those in the future, right? Because Tesla's pulled a lot of those gains forward now. And so to go from a 1 trillion now to a 5 trillion, that's a pretty difficult process versus going from a $40 billion market cap or so when I was buying it to a $1 trillion market cap, right? So you start if you're pulling returns forward, if your stock goes up more and more. And right now, if stocks are at new 52-week low after new 52-week low, you're not pulling any returns forward. And now your chance of getting a very, very high ROI just went up exponentially. Okay. And so I think these are the important things to remind yourself in this sort of marketing. Come back to this video. This is one you want to save, put in your notes on your phone or something like that. And whenever the market gets bad in the future, whether that's in a week from now, a month from now, a year from now, or 5 years from now, come back to this sort of video, because this is one that I think these points are going to be relevant. It doesn't matter what type of market you're in, but when stocks go into the new 52-week low after new 52-week low, these are the things that are actually important to keep in mind. Okay. Much love as always, guys. Hope you enjoyed this. Stay focused out there and have a great day.